In this video, I want to go over the 5-minute time frame and the importance of waiting for a 5-minute candle to close before you get into a trade. What candles to look out for before you even enter the trade, and why the 5-minute actually is important compared to maybe the 1 minute or even some higher time frame. So when it comes to the 5-minute candle, there are two rules that you need to be aware of. When we're using it for entries, we want to wait for it to close. Many times people are going to jump in at 4 minutes before the candle even closes. Well, this candle is going to close bullish because look, we've been bullish for 4 minutes, so it surely is going to stay bullish. So I'm going to get a better entry now and get in, and then I can take the trade up or down or wherever. Just to find out that the candle in that minute goes to bearish and their trade isn't validated, they've not followed their plan, and all of a sudden they've taken a loss. Then they start blaming, oh, the 5-minute candle is rubbish, I'm going to start using the 3-minute candle or stuff like that. So always make sure you wait for the candle to close. If you do not have the discipline to wait 5 minutes for a candle to close before you get into a trade, then you need to reevaluate the whole mindset behind your trading, because you need to be able to wait for a 5-minute to close. The second rule on the list is always wait for an engulfing candle. Don't get in, and I made the mistake in the past of getting into trades when we would just tap into the zone and get any sort of reaction in our favor. I've increased my win rate simply by waiting for the engulfing candle. So they are the two rules that we need to be aware of as we're going into today, as we're going into the charts. So if we jump into the 5-minute time frame, we are trading the Nasdaq. So we have this strategy for Nasdaq. We've drawn out our zones and we're simply waiting for a valid reaction from one of these zones. So let's say we're playing price on now, we get our tap into the zone, and there we go. We get our engulfing candle. Always make sure it engulfs the previous candle that has been formed. You're going to get this in a lot of instances, but make sure it engulfs. And again, make sure you're waiting for it to close. What would you do at this point? Put your entry here. Your stops are to be above the bodies, above the wicks, and above the zone. Always make sure you account for spreads as well, so leave a little more. And then we'll just, for the sake of the video, we will target the bottom of the zone. Now, waiting for these candles are going to increase your win rate because it is that confirmation that it has closed. Using the 5-minute is very important because it gives you a general idea of where price is going. If you're using the 1-minute time frame, it doesn't give enough time for the market to say, okay, are we actually sort of going in this direction, or is it just a 1-minute candle close? It's not enough confirmation. If you give it 5 minutes of candle closing in your direction, that is enough for me and my strategy to be able to, okay, I'm happy for price to continue down, in this case to the downside, to the zone that I've marked out previously, to take my take profits. So now that we've got our entry, we understand that using the 1 minute for an entry, because we're day trading, isn't viable for an entry criteria. We have to wait 5 bearish candles, in this case, bearish candles to close on the 1 minute, or just one candle to close on the 5-minute to get into a position. And in this scenario, we came right back to our zone and we reversed. So you have to understand the process and the importance of just waiting for that 5-minute to close. So it's a new trading day in the backtesting world. So if we go over a gold example here, we can see we have got our bias for the day. And again, we're just using them previous US session highs and lows to get our zones, to get our bias. If price does this, I want to do that. Therefore, if price breaks above here, I want to see a tap back in, 5-minute engulfing to take price upwards. If we get a tap into this zone, I ideally only want to be taking sells. If we break this structure point, I want to see a retest back in to take price to the further downside. And it's unlikely, but if price does reach down here in US session, I want to see a retest in to take price lower. And then we'll go find targets from previous US session highs and lows that have happened in the past. So if we jump to the 5-minute time frame and we want to play price along here, we're simply going to click the play tool, and we can see we get a break below, we get a tap back in, and we get our engulfing. Now, this highlights the importance of finding a daily bias. Not only will it save you from taking losing trades? Because yes, we got the perfect entry from this zone, but we figured, well, if price came this low, the likely chance is I don't want to be taking buys from this price. Price is too low for me to take a buy from. I'd only want to take buys from the previous high, get a retest in, and maybe this 5-minute engulfing pattern that's happened right here, so then we can take price to the top. So knowing that will save you from a losing trade, because you could get into this and be like, well, hang on a minute, I was actually looking for buys from this zone, and now it's completely reversed. And this is where the understanding and the experience, the more you get into trades, and the longer that you trade for, the more you'll notice things like this, and it'll become second nature. Well, I bought from there in the past, price is too low this time, I'm actually going to go on the flip side. If we break below, I want to see a retest in and take it down. So that's where my experience has come from. So you have to just have time in the market, so you might see something like this and be like, oh, well, I want to take buys. But a lot of the time, I'm just going to be solely looking for sells, and that comes down to my experience in the market. However, we can see we got a break below and we got our engulfing candle. So all the entry criteria is met. You'd simply, above the bodies, above the wicks, and above the zone, your target could be down here for a 1 to 2. But that is basically the importance of waiting for the engulfing. So yes, we got a bullish here, but the bias was not to take buys from here. So we would have seen this and be like, well, okay, fair enough. Maybe we might start seeing buys from here, but that's not in my plan. That's not in my strategy for the day. So therefore, I don't actually want to take buys from this zone. So I'm going to wait to see what price does. And if we get a break below, or if we do push up and we're still in our plan, in our time plan, so before 5 p.m., we can get a break above here, tap back in, and potentially an entry to take price further to the upside. However, in this case, price melted down. We got a retest in. We got a 5-minute bearish engulfing candle, and we can then take price all the way to the downside. Whether it reaches all the way down, that's another story. But again, this is why you have an exit plan. Let's say 5 o'clock is our exit plan. So you'd simply put it at 5 o'clock. And you'd pretty much be closing at a 1 to 1. Yeah, at a 1 to 1. Still a winning day, but always wait for the 5 minutes engulfing and have that daily bias. And again, there'll be more videos on daily bias coming out soon. So, I always post my daily analysis in a Discord I have. So in the Discord below, I always post in my signals and charts part of the group. Every single morning I post, look, this is what I'm going to be looking for. These are the certain zones I want to see price tap into. Some of the time you're going to see price explode. That's when it's on you to go back in the US sessions and find different zones for yourself. But that is everything I teach anyway. So that is, you should be able to have that skill set to go back. If your candles do look like this, you'll be able to find the zones immediately and be able to go from there. So I just wanted to say, anything I do post daily wise, what I'm looking at, it's all on the Discord. So jumping into another example on gold. Now, we only have one zone that has been marked out for the daily bias. This is because, well, there's no price near it. You can go back in history, but ideally, I'd like to keep it simple. So I have one zone, and this is why I trade 4 different pairs. I only take 1 trade a day. If I lose that trade, that's it. If I can go break even on that trade, then I will get the chance to take another one. But it's a maximum of 2 trades unless I lose one, and then that is it for the day. So I have 4 pairs that I trade in US session, but the reality is I'm only really taking 1 trade a day. So when it's like this, I like it to keep it simple because I have other options to trade. So I can go back and get multiple zones and make it complicated for myself, or I can just have one zone. Okay, look, if price comes into this area, I am going to then take a trade from it. If not, I'll just go look at a different pair. It's not that big of an issue. So the main zone for me is the previous US session high that we had on this day. So if I jump to the 5-minute then, we simply are going to play price along. Now, we had our tap in, but did we have our engulfing candle? We finally got one at this level here. Now, this is when it comes down to you to realize, is the risk to reward worth it? Nothing really engulfed anything until this candle right here. Now, realistically, what are your targets going to be? So we've said in the past that we like to use support and resistance zones. We found a little bit of resistance on the 5 minute from this area. So realistically, your first target or your first area of interest where you could maybe move to break even or take some profits out of the market, you're only looking at a 0.7 risk to reward, which is shocking. So I have a rule: you never ever take a trade unless you're making at least 1%. 1% is the rule. If it's a 1-to-1, go for it. Anything under a 1-to-1 shouldn't be worth it to anyone, really. However, this is where it comes down to you. Okay, look, is this trade worth it? You should immediately be saying in your head, no, it's absolutely not. The risk to reward just isn't worth it. So what do you do in this situation? Because the 5 minute engulfing only gave it to you when price has basically just taken off from the zone. There's two options you can do. You can either wait for price to come back into the zone, or you can just move to a different pair that you're trading. I would say always have at least 2 to 3 and maybe even 4 pairs like I do to trade. Just so when you have days like this and it's like, oh, that's a bit frustrating because we got to tap in and we started pushing to the upside. However, it wasn't an ideal entry. So what would you do? You could just move to a different pair, or you could wait for price to tap in again and give you that engulfing candle that you've been waiting for and hoping for that happened on this trade right here. So in this scenario, we're simply going to wait for price to come back into the zone. So here we have it. So again, did you get an engulfing candle at any point? No. We got a tap in, but we got no engulfing. Therefore, no trade is going to be taken. So we play price along again. Bingo. You finally get your engulfing candle. Now, again, where would you have your stop losses? Below the bodies, below the wicks, and below the zone. So the wicks are a lot lower than the zone. So you just have them below the wicks. And where would you target? You could target your previous target. So that 0.7 has now turned into basically 2%. So just by waiting for price to come back and get an entry and give you the engulfing candle that you've been waiting for, you've actually increased by more than double your risk to reward. So it's from here that you'd play price along and see what price does. It may not hit your target, it may do. Again, we have the 5 o'clock rule. So let's just quickly skip to 5 o'clock and we will see whereabouts we got closed out at. It would be about here for a 1 to 1.2, which in my books, like I say, anything above 1% is fantastic. It's a good trade. So 1 plus in percentage wise when your risk to reward is always worth going for. It is worth in this scenario because our target was almost hit here. You would just move to a different trade. You would not be trading this pair. So because we've already had the price fill with this reaction off the zone here, I say it would lower your chances of getting a winning trade if you were to wait for price to come back. Let's say price only came up to this level before it gave you another tap in before you got your engulfing candle. Then I'd say, okay, yeah, cool. This is a better risk to reward trade. This has more likely chance of hitting because price hasn't already been up here before. So therefore, you would get a better entry, a better trade. With this one, it was higher risk because, like I say, price has already been filled at that point. So you're just lowering your chances of getting a winning trade. So therefore, it would not be a clean setup in my eyes. But for the sake of the video, for the sake of learning, okay, did we get the engulfing? At the first time, no. At the second time, yes. Where do we have our wicks? We always have them below the bodies, below the wicks, below these zones. Quite clearly because price came up, teased us, came back down, hit the zone, and then gave us another engulfing that we could have caught a trade off. But the realistic, in an ideal world, you're not going to take this trade. You're going to go onto a different pair where you have a cleaner setup.